If we're not getting the growth we would expect or hope for out of Europe, and China seems to be tapering off some, and China really, as you pointed out, has been driving most of the growth globally, where's the growth going to come from? Can the United States really sustain this?
Well, it doesn't all have to be shouldered by the United States, although things are pretty good here. Well, this is likely a golden age for the U.S. consumer. We have growth over 4% and unemployment under 4%. But, you know, Europe has slowed, but to use the baseball metaphor, you know, they're a few innings behind us. And China, you know, the growth rates that they're having are certainly slower, but they're still quite high. And keep in mind that GDP per capita in China is about 1/8 of that of the United States. So there's a long ways to go for China to catch up to the United States, even if growth slows a little bit.
Nonetheless, even if the U.S. is going to be the stellar growth model, Emily, is there a rotation we're going to have to see if the dollars even hold this level? You mentioned maybe pairing some small cap exposure.
Yeah, I mean, I think there's going to come a point where the dollar really can't hold, the U.S. can't really hold up the rest of the world, right? And at that point, there's going to be a bid for more defensive assets. We are not there yet. Don't get me wrong. We still have a risk-on posture. But there's going to come a point where you're going to want to own duration. And frankly, the high point that we saw in the U.S. 10-year of 311 back in May could be behind us at this point as we start to rotate there again down the road.